Good morning, folks, and welcome to the pre-market insight for March 13th, 2020. We have a bit of a bounce on the way. Let's take a look at the charts. So we're taking a look at the the S&P 500 futures, and thus far we've rallied just about almost 100 points off of the overnight low, up about 4.03% on the ES. Now, where are we in terms of the overall price structure? Yes, we've bounced 4%, but what does that ultimately mean? Given that we've given up so much gains in the last week and a half, and especially after yesterday's price action. Well, as you can see, we opened yesterday at around 2563, and we have a gap to fill with at the 2601 level. And so, although we did fill that gap yesterday, but we rejected and came downwards. And so, the two levels that we have to look for on the upside very early and very clearly are this price level here at 2587. We have yesterday's high at 2657 or so. And so this is going to be a measure of the strength of the rally today. Can we get above once more yesterday's open? And then if we can get above and hold yesterday's open, that sets us up for a retest of this yesterday's high. Now, given the volatility and the expansion of price ranges, certainly anything is possible, but we must plan for what is probable. Again, given the magnitude of the move down, we are creating sellers at every level as we go down. Why? Because as price returns to where someone previously bought in or previously was long, their psychology tells them, listen, I'm getting a bounce in price. I can recoup some of my losses. I'm going to sell here. And so expect at every level of interest going forward that we are going to probably pause. If not pause, we may break and reverse hard in the other direction. So let us be careful out there. Let us respect levels of interest that may turn into potential areas of support and resistance. If the trade is going in your direction, sell into strength. At the very least, take some of it off, especially if you're on the shorter term time frame, because of how volatile in both directions, both up and down, the price action has been. So on the downside, what can we look for today? Seeing that we're this close to the 25 around 89 2590 level, I would expect a break of this high here at 2577 and a test of that 2590 level just to see what gas the bulls truly have in their tank, and can the bears defend that level. So definitely it's an early level of interest to watch. If we do turn around and roll over, then we can very easily see once more back to this 2496 level that we held on the initial candle, on the move down twice yesterday, on the initial open and a press into it once again at around lunchtime. So again, 2500, 2496 becomes an important level to the downside. Do we hold that to set up some stabilization? Not necessarily a big move up or a continuation of the move down, but can we stabilize for a day or two before we then uh, build some potential energy for a continued move in one direction or the other? Keep it simple, smarty. Reduce your position size as you are still able to gain what you probably would have months and weeks ago before this level of volatility by using a smaller position size, having less of your capital at risk while still being able to take advantage of the price moves because the range has expanded so significantly. Preserve your mental, emotional, and financial capital for periods that are more conducive and more advantageous to your particular strategy that consistent with your risk tolerance, your investment objective, your time frame, and of course, your account size. One man's buy is another man's sell. So mind your business, do your due diligence,